எல்லாமே
அவன் சொன்னது
எல்கேஜி பிள்ளைல மாறி பாஸ் பண்ணிட்டார். எனக்கு வந்து அதை மிஸ் பண்ணேன். என்னத்துல உங்களுக்கு லேர்னிங் கிடைக்கிறது அதுல எல்லாம் அட்வான்ஸ்ட் அக்கௌண்டிங் அது இதெல்லாம் போட்டு என்கிட்ட ஒரே ஒரு கேள்வி தான் கேட்டா நான் குயிக் புக்ஸ்ல இருந்து கிடைக்கு மாறிடும் அதுல உங்களோட கன்ட்ரிபியூஷன் சொல்றேன். எனக்கு கன்ட்ரிபியூஷன் அப்படின்னா ஓவராலா நாங்க நம்மளோட எக்ஸாம்பிளுக்கு இன்வென்ட்ரி எல்லாம் கூடிங் இல்லாம அந்த ஏஜென்ட்ல ஏஜென்ட் கிட்ட இருந்து கூடிங் சொல்றது பெருசா சொன்னேன்.
நான் சொன்னேன் financial service center அது வந்து சென்ட்ரல் financial institution சென்டரா வந்து ஸ்டேட் அதுக்கப்புறம் மென்ஷன் பண்ணி
அதெல்லாம் நீங்க சொல்றீங்க பெருசா தாக்கி அதே மாதிரி தாக்கிதான் நடந்து What's in the BPO sector like? Jadi BPO only regulation and all very existing market let's correct the level 2
Right. Good morning, all of you. So we will start the presentation. Targeting the group number 1. Srilanka, 32, 91, 38. Right to that.
We are number 1. So today we are presenting about an analysis of enterprise risk management. For that we choose Harris PhD in 24, 25 and 34. These are the group members. And let's move to the introduction about the Harris PhD. The Harris company founded by Tal Harris in 1878 in Galle, and this is the one of the most diversified conglomerate in Sri Lanka. And they have more than 150 years experience. And also the Harris company operates in 16 different industries such as agricultural, textiles, and transportation and the logistics. And here I mentioned their vision and the purpose. Then let's move to the risk and the risk management. The risk means a chance of a loss of or unfavorable outcome associated with the action in the organization. So there are 3 types of risk, like upside and the downside, internal and the external, strategic and the operational risk. And here we mentioned some risk as per the annual report. This one is macroeconomic and the market risk, like fluctuation in exchange rate and the inflation. And the second one is operational risk, like supply chain disruption and high energy costs. The regulatory and compliance risk, like as example, you can take change in the government policies and education, and also the restriction about the impact import and the export. Then the risk management is the process of identifying and assessing and the controlling threat to organizational capital and the earnings. So here I mentioned some of the risk management approach. They mentioned in their annual report, like the Harris group follow a bottom-up approach to identify, prioritize, and mitigate the risk. And also the key risk indicators are used to provide early warning signals for emerging risk. And also they use a multi-layered model of detect like operational level and risk unit and the strategic level. So for the next chapter, I will introduce, I invite the Sumaya to continue. Let me get you through the risk appetite and risk skills. So, risk appetite is an amount of risk which an organization may take in order to achieve the organization. So, when it comes to the Hades, so not only Hades, like all of the organizations should have a normalized risk appetite system in order to survive in their growth has been. So when it comes to the Hades, they have a balanced risk appetite approach to balance between the leveraging opportunities and mitigating risk. So when it comes to the risk appetite of Hades, and also the risk appetite strategies is aligned with their long-term goals. And they also make sure all the business sectors and individual businesses are inside their business comfort zone. So they have inlined their risk appetite approach for their long-term strategies, and they have diverse business sectors. So they definitely need to make sure it all implemented around their business sectors, especially like transportation, and they have a group-wide risk management and internal control policies to formalize this methodology. When it comes to risk attitude, it is the behavior of an organization towards their risk. It can be risk averse, neutral, or risk taking. So when it comes to the Hades PLC, they have a risk averse system for their ethical and compliance risk, and for their social and strategic risk, they have a balanced and opportunity-driven strategic for their business growth, and they have incorporated some ESG committees to address the environmental and social risk, which is a proactive approach towards the risk attitude. So they always make sure to balance their business zones because they have different business sectors as well. And also they are compliant with the zero tolerance for bribery and corruption. So for that they use a risk averse system for their compliance and ethical issues. And some risk management practices Hades has is the ERF. They use social model to study the ERF, and they have a well formalized ERF system, and you can have a brief intro in the presentation in formal state. And they have different committees to review those risks. And also they have some formal risk policies because they have different sectors and groups. So they are always make sure to make a proper alignment towards their group-wide controls. And also they, as I mentioned earlier, the ethics and zero tolerance to imply this ethics and zero tolerance, they have internal audit and discipline system and some compliance system as well, which is implied by the Board of Management. And also they have some sector strategies. So they have backward integration for the eco solutions and some climate adaptation for their plantation businesses, and some science-based carbon reduction targets in their key sectors. So for the next topic, I would like to follow on. Thank you. So let's talk about types of risk activities. So according to their 24-25 annual report, we have identified, they have mentioned three main risks: market risk, operational risk, and sustainability risk. According to their annual report, they have identified four market risks. This one is economic risk. Under this risk, it includes policy uncertainty, incomplete debt restructuring. So the potential impact will be impact on growth potential, cross-border transaction, international business operations. Since the impact and likelihood are high, they can avoid this risk. So, by increasing export orientation, strengthening stakeholder ties, maintain strong banking relationship, they can mitigate economic risk. And when it comes to the liquidity and financial stability, it includes liquidity storage, debt servicing issues, and single borrow limit reduction. The potential impact will be reduced operational flexibility, funding constraints. So the impact will be high, the likelihood will be low. Because of that, there is can this risk. However, diversity funding source improve broad level liquidity oversight, they can mitigate this risk. So when it comes to the geopolitical risk, it includes like tariffs, supply chain disruptions. The potential impact will be import revenue decline, increased cost, and the impact will be low and likelihood will be impact will be high, likelihood will be low. Because of that, they can transfer this risk. However, diversity export markets focus on non-traditional regions, they can mitigate this risk. When it comes to the fourth risk under market risk, subdued demand. This includes inflation, reduced disposable income, weaker global demand. However, the impact will be decline sales volume. The likelihood will be high and the impact low. Because of that, they can reduce this risk.
Okay, you guys have that impact likelihood analysis? Yeah, another one design higher.
No, according to their academic. They pointed out from 1 to 3. So, by diversity product markets, they go forward contracts, they can mitigate this risk. When it comes to the job operational risk, they have identified 3 main operational risks: rising raw material costs and supply chain disruption. That includes volatile geoeconomic tensions. Potential impact will be marginal erosion, land uncertainty. Since the impact and likelihood both are high, they can avoid this risk. So, how they can avoid daily price monitoring, diversity supply base, building long-term supply relationship, they can mitigate this risk. So the next risk is data protection and cybersecurity. This includes hacking attempts and potential instability. They can lose their data, legal penalties. Since the impact is high and the likelihood is low, they can transfer this risk. However, they can mitigate this risk by strengthening IT governance and employee cybersecurity training. When it comes to the high staff,
This comes to data protection, how we are going to transfer that risk response you have highlighted. Yeah, I know report to transfer. No reporting get the transfer.
yes, that's the activities lower than
That was report. That is it.
the screenshot is in the now.
Get the landing. Data protection. Yeah, okay.
So impact is higher than likelihood. So that's what he said.
That's why I'm asking. Then you are designing for the annual report is designed. Right? So when it comes to data protection, it's not transfer. The data protection. The governance, the employee cybersecurity training. So those are some mitigation strategies, like reducing strategies. How we are transferring the data. Some data protection to some. Can you give them the transfer? It means we are giving our risk to someone else. So the theory is saying the impact is higher, the likelihood so like you are going to be transferred. So take a look at what is the risk you are. Even though theory says, we can't transfer.
When it comes to the sustainability related risk, they have identified physical risk of climate change, and this includes fluctuating rainfall, rising temperature, the potential impact will be lower agriculture.
Same. Yes. Then they are not with it. No. The climate change is a kind of environmental thing happening. Right? So if you are going to avoid it, that means you are not going to do the business. That because on strategies are wrong. So you are going with the theory. That's right. Like with the impact if I and the likelihood, right? They can go. That's what the theory is that. But it's not a practical thing. I don't look at things. Amara, the Lula, we take a high line to the high. And I go, it goes and this one they can do. We need to think other way. Because of the impact is higher lights on high, we can think how we are going to produce them. The acceptable level. But Tara framework is correct. According to this, sometimes it's not that. But it's good done. But it's not.
Enterprise risk management is PLC. So enterprise risk management is a structured approach to identify and manage risk that associated with an organization. So as the course of framework, so that one person, ERM should be integrated with all the levels of the organization, like strategic level, business level, and operation level. So this follows the course of framework using to assess the risk by likelihood and impact. So each business unit identifies its main risks and opportunities, which are then shared with the entire group. So this is the course of framework of PLC. There are 5 main components. The first one is determining material aspects for each sector. That means each business unit have to identify their own specific risk. And the second one is determining material aspects for the group. That means sector risks are combined at the group level to identify bigger cutting risks that, for example, geopolitical. And the next one is identifying risk indicators. That means key indicators are used to spot potential future risks. Monitoring risk, that means risks are reviewed quarterly at both sector and group level. And then last one is mitigating or managing the risk. That means action plans are created to manage risk. For example, like diversifying their suppliers and hedging towards buyers. So this is the ERM process at Helix PLC. They are following 3 defense lines. The first defense line is each business unit manages its own risk. And the second line of defense is committees and boards monitor risk at the sector level. And the third line of defense is the board and top committees. They are overseeing all the risks that associate with the organization and vehicles. So there are several sectors in PLC and they are facing several associate there are several risks with every sector. So, like for example, climate changes for agriculture, worldwide volatility in transportation, raw materials shortages in manufacturing, and market competition in products. So, the ERM risk process that they take are climate resilient and investment in digital development, strategic partnerships, and automation, and supply diversification, and market research. So, this will discuss about same population in the company. So the main key policies that have been is the risk management and the management and avoid bribery and financial and corruption. And also for the code of business conduct and ethics, and also the research policy in which the employees can report their problems safely. And also embedding risk awareness is like it protects the company's reputation and company image, and also it supports safe and sustainable growth in the company, and also it saves costs by preventing small issues from becoming major problems. So building risk awareness among employees has always been important. It's always told at the top, which means first prioritizing the employees follow their bosses. And a separate resources has been dedicated, at least an allocated budget is available. And there's also structural training. During the last year, 791 employees were trained in data privacy. And also external experts are being appointed to test and validate the risk assessments. And again, the whistleblower policy ensures anonymous reporting so that members won't have any problems when they report. That means when employee reports about a problem, they don't have any damnation or any effect.
Normally nowadays people are avoiding this though.
The directors, they just approve and monitor the policies and company.
Right. One question from my side. So what is the strategic direction which they have identified here? The highlight. Yes. What is the strategy? They have highlighted. This of the day, sorry, they are having a very quickly, will be impacted to the very population. Yeah, right. That is the major mistake they are facing. That is why they are going to financial time. Competitive, they are going to take up some credit. Overall, good percentage of 90%. Because also very clear. Next. Okay. You got it. Thank you. Now they are going to. 053. 24. 004. 046. 059.
The body. So, today we are pleased to present you guys about the role of governance in effective risk management. I'm Basant Bharat. These are my teammates. We are going to. So we are going to present under these subcategories about governance of roles in effective risk management. Second space, PLC. So that is PLC is founded in 1868. Business excellence they have right now. Their headquarters is located in Colombo, also listed in Colombo Exchange, Colombo Stock Exchange. Not only Sri Lanka, around Asia, Middle East, almost all of these countries they are currently operating there right now. Even though they can say PLC is US multinational company right now, they are started as a normal trading and shipping company. Let's look at what other operations they have throughout their business operations. So tourism research, tourism hotel management, destination management, also airline BSAA for Singapore Airlines, also medical logistic for operation, freight forwarding, courier services, and container management as well. These come listed into investment, power generation, and energy also. Like this is the first in Sri Lanka who current waste into the energy as well. Under their gated level for plantation, printing and packaging as well. This of the service, insurance, property management, money transfer, latest ICT and the services also they are providing to the market. So with these operations, we can understand they have to face, they are bound to face a lot of risk and challenges toward their operation. So what are the risks they are going to face? What are the risks they are going to face? How they are protected from this risk, and how they are facing this risk, and what are risk appetite they have, and what is the role of compliance in risk management is going to explain by my teammate. So take it.
This is any uncertain event or condition in organization and ability to achieve objective. So these are the stages. These are the stages. So risk identification. So what is the risk identification? Detecting internal and external risk affecting operations. So the example for a context, climate change, climate risk. So the climate risk, sea level rise or extreme weather, for example. So logistic exchange rate and voluntary cyber threats. So second one is the risk assessment and evaluations, analyzing that could impact of identification risk. So for the example, climate risk and risk same things, and risk mitigation and response. decide to avoid, mitigate, and transfer of extra risk. For the example, assessing audit sector. So, assessing probability of extreme weather affecting resort and logistics evaluate potential financial loss for the currency fluctuation and risk mitigation and responsibility and impact on the measurable reduce or managing risk. So, for example, same as example audit, NTD leadership, environmental, energy, plant certificate with the activities and renewable energy is the thing. Logistic for the logistics sector, currency holding and cosmetic maintenance business continuous plans and risk monitor and review, track risk and control effectiveness continually and water risk review. For the example, water risk review and real-time monitor software of workshop for the staff awareness. So next one is risk appetite. And so risk appetite is the level of type of risk and organization is the willing to take the risk. Risk appetite is the behavior approach of managing and employ toward risk. So these are the stages, risk appetite settings. So the definition is defining the level of uncertainty the company is willing to accept. For the example, both set annual appetites for the each segment. For the tourism sector, maybe tolerate high variability, insurance or financial preference low volatility. And the risk attitude defined, its definition is the establishing overall the course toward risk sharp by the culture and strategy. So, for the example, converting for yet forward-looking, encourage every report is issuing emphasis ethics and
reading slides. You can understand things and express it to the audience. The point of reading slides. So, what do you mean by currency? I'm asking, under the strategy, they have mentioned, you have mentioned the currency hedging. Correct. When it comes to examples, the yeah. I'm asking what they mean by the currency hedge. How it become an example. How do the currency hedging, how we are going to mitigate the risk. They are saying that this mitigation and response under that example is currency hedging. I'm asking how you are going to mitigate, how you are going to it as a response. So, else you can mention what is the meaning of currency hedging. So, how we are going to mitigate the risk monitoring and under review, risk monitoring and review. So, you are conducting workshop for staff awareness. How it goes with the what kind of awareness session? Yeah, I am asking this question because you are just reading the slides. So, at the slides also, you have just copy and paste from the annual report and just put to the PPT. All right. So next person.
Then I'm going to take your student categorization and assessment. So we have to see the risk assessment of in space into three parts: strategies, business, and operational risk. The first one is strategical risk, which affects long-term direction and growth. Geopolitical risk, which means the conflicts in these days we can see conflicts in Middle East and Eastern Europe, so which has impacted the travel. So since it has impacted the travel, we can see there are uncertainties in logistics and shipping. So in order to mitigate this risk, it constrains they are seeing different markets. So that is one way of mitigating geopolitical risk. The other one is global economic slowdowns. So since there is a global economic slowdown like inflation, tariffs, and recession and growth, in the Asian space, they identified this as these ones give a far beyond negative consequences. So they are expecting to go beyond to see new markets such as renewable energy markets. That is one of the ways they are going to mitigate this global economic slowdown. And the other thing is reputation. So reputation is another important strategic risk. So the incidents that those are happening to the brand trust, affecting their stakeholder confidence. So to mitigate this risk, they are maintaining a communication unit in order to give a proper information to their stakeholders. The next I'm going to talk about is the business risk. So business risk, under business risk, we can see the industry competition, regulatory change, and financial exposure. The first thing we are going to see is the increasing competition because of the low cost inputs and the customer demands. There is a profitability issue. So since that it is affecting their revenue and market. The next one is regulatory changes. There are the regulatory changes like tax studies, investment law, and amendments. So to mitigate this risk, they have the important key segment areas. They have maintained the compliance officer. Right. The next one is the financial risk. Since they are doing the operations in Sri Lanka and Maldives, they have the foreign currency issues. So even though they are earning, they have to spend in different currencies. To mitigate these issues, they are using hedging tools and contracts. The next one I'm going to talk with you is the operational risk. So the operational risk means the risk which affect the day-to-day tasks and systems and processes. So things Excel space is in a Colombo, which is doing a lot of business, shipping and logistics. They are heavily depending on the heavy machines. So when the heavy machines disrupts, they have downtime and also in order to mitigate this risk, they are having a regular checkups on their machines. So this could mitigate their risk. And the other thing is cybersecurity risk. So they are on the digital platforms. In the digital platforms, they are having a lot of when it comes to digital cybersecurity risk, this affects a lot, such as they use digital platform to do the bookings and cargo tracking, financial statements. So in this case, cybersecurity risk, they want to mitigate it. So in that, they are having a cybersecurity unit in order to maintain see how things are happening in order to take quick decisions. Yeah, next.
Today I'll be presenting enterprise risk management. Enterprise risk management. Better sorry. For enterprise risk management, we focus it. I can say PLC, how they structure and apply with enterprise risk management. is the enterprise risk management is enterprise risk management organization structurally and identifying, assessing, and monitoring for systematically focused on their strategies, convention, and strategically achieve their objects. That is the enterprise's risk management. So there are PLC achieve to identifying, assessing, mitigate, monitor enterprise risk management processes. So they have established the three defense lines. The first defense line is a board committee, the risk committee. This committee, there are two categories are there: board members and audit. That is the major decision making line. Second line is the segment risk committee. Segment risk committee is all the managers and they are planning to the 1 to 2 lakhs to identify risk. Third defense committee is risk management unit. Risk management unit is every each sector have a leader to identify the risk and report to the segment risk committees. So they are taking to the key. They are taking to the 4 sectors there. So 4 sectors, they are using different types of ideas and methods. So tourism, they have a major risk, travels and weather culture. So they have to adapt and research about the different culture and doing about that kind of things. Second one is maritime and logistics. So they have a main risk heat maps. The main risk is fuel and government rules. So they have some systematically softwares and they are using tracking systems. Third one is that's investment plans. Investment plans, they are amongst plantation and power. So they are using the environmental risk using for eco-friendly plans. The fourth one is services. They have 2 different services, IT and finance. They are that type of risk. They using a different type of safety procedures and safety governance. I hand over to Galle.
Sorry.
Ask. Yes.
Point. But the internal control of environment is taken with PLC. As far as there is concerned, taken PLC has a robust framework covering operational, financial, environmental, and site risk. And the key control areas they use is that for example, for climate and disaster management, they use vulnerability maps and disaster risk reduction council. And as per cybersecurity is concerned, they monitor on a group level. Regular compliance audits are made for that. And
They have any kind of a partnership for disaster risk reduction council? Any kind of partnership with any kind of
I'm not so aware of that, sir, because I just went through the systems they use and I didn't go.
so they are having a kind of a partnership with the Asian Pacific Alliance for disaster management.
Financial science, they have an interest cover of 2.82% of interest they pay. So they have a major problem for that. And compliance and ethics, they have 0 confirmed breaches until now. And employees use dashboards, heat maps, and performance monitoring tools on a basic level. At present. As far as the importance of risk awareness is concerned, promotes agile decision making. That means employees can quickly identify and escalate issues to that. And strengthen strategic resilience against macroeconomic and personal environmental challenges. Build stakeholder trust through maintaining plan structured risk management and enable sustainable innovation. That means that recently they have invested in Port City BPO, analyzing the risk on that. And then board and ERM goal means for now, Excellence has a strong ERM policy and they maintain it very. And board defines the risk appetite and ensures that internal controls are effective across all units. And they implement the defense in 3 lines. The first level is managers oversee the day-to-day handling, and the risk and compliance team oversee and manage helps the teams across them. And the internal audit gives an independent opinion on risk management. Segmental risk committees monitor industry-specific risk and report findings to the board.
Recommendations.
Yes. And as far as now, they are on a basic level. They can. There are rooms for improvement. As far as concerned, AI-driven analytics can be used for real-time monitoring, and they can centralize the dashboard for senior management. That means they have a basic level now. They can advance it a bit more and conduct cross-departmental workshops, which is very useful when job shifting, and perform scenario planning and stress testing. That would be a great measure.
They are not doing this. They are that can stress it.
Doing a basic level.
Basic. How you are identified? They are doing basic level.
And
They are working there.
also,
They are not doing this.
So they are trying to develop it.
inclusion part, technical variance in structure, the approach on violence, accountability, and sustainability, maintaining a culture across all. Thank you.
All right. So let us come to this topic. Okay. There are some improvements in your presentation, right? So when you are making the presentation, that should be my backtrack to the audience, right? Why that your presentation just some slides are just copy and paste from the kind of the screen from the annual report and from the development and from. Okay, good. Yeah. When it comes to the expenses, so the main sector is the tourism, right? Tourism. Yeah. So when it comes to that specific sector, what kind of strategic risk you have identified?
Yeah,
Other than
So climate change will be effective. That means
how?
the monsoon period, people will be visiting there. So, and at that purpose, the revenue should be maintained and the alternatives can be planned to local tourist discount, and they can plan it before. When it rains, we can't decide because maintaining a risk management would lead to pre-planning and the effective revenue maintaining procedures.
Any other? Yeah.
That's about.
And so we can use something like ports related tourism, the new market areas we can think double and then push it.
Yes. Other. Sorry.
Current hedging is the influence of the currency with the market rate. So they are like foreign currency marketing,
So what is the risk?
financial risk.
financial risk.
Those that exchange
I'm
rate.
not asking.
Exchange rate, basically it's based on the exchange rate. So currency, like foreign taking like example scammers, they are booking like a car, tourism package.
Why they are doing the currency hedging? Tourism?
Shipping.
No, I'm asking that. Now I'm in the tourism sector, right? I'm the tourism sector. I'm asking what are the risks in the tourism? So for the tourism sector, we are use currency, right? What?
The operations are conducted in Sri Lanka and Maldives, but the expenses are they are doing. And then there is a currency exchange issue. So, in order to mitigate that risk, they are going for.
I don't think it's a kind of a strategy. Not a major risk, right? Because
It's a long-term risk.
yeah, that is,
It's not a, so discussed by us. I got that.
and then they don't have one market on the because that they must. Right? You are good committee. Yeah, I mean the 40 to 9 now 9. Yeah, like so then you have a product. So much. Yeah. The anyway, it's not good. So, coffee. Just like that. Yeah. Then well, sit there. Then go back. Go back. Back. I'll check your numbers, right? 63, 85, 40, 85, 85, 40, 40. Right side. 063, I will okay. I'm 66. 66. Remove Jamie, right? Only comment. Okay, you can start.
About corporate responsibilities like management. So we have taken Amana Takaful like PLC as the company we are going to present. So Amana is an insurance company, which is prominent in according to Sharia compliance and insurance and finance. So we have Amana Takaful has 2 branches, which is general and life department. They used to be having specialized in life insurance as well as general to marine and vehicle insurance. So risk management is not only a unique component in part of it, because additional to a convenient risk and the volatile risk, it has a special risk of non-compliance to Sharia. So the Sharia refers to the Islamic principle and regulation which are enacted by them in order to provide financial services to the policyholders. So that embarks on special risk management and goes deeper within the case. So what is risk for its effect, according to ISO 31000, risk is the uncertainty of something which is going to happen, whether it is positive or negative in a due course. So risk management ERM is the process of identifying, analyzing, and responding to such a risk in a unique way to eliminate the negatives and positives. So this ERM plays a special role in Amana Takaful because not conveniential to operational risks such as IT failures, financial failures. One of the major risks that Amana faces is the non-compliance on claims, which means the policyholders not getting their claims on time by due date. So that's one of the major risks, and risk elimination process has to be done to Amana in terms of that.
So they are not paying.
Huh?
They are not paying. They are not paying.
Interest, yeah, almost 50 to 60% they pay. I work that much.
Then people are shouting against it.
Sorry. Yeah.
Huh?
Does not like to be interest and who does not like to be.
Yeah.
Yeah.
So I come to that. So another risk, the reputational risk, like in terms of trust and Sharia compliance. As they are governed by the board of Sharia, they have to be legitimated to restrict Islamic rules and regulations. For an example, they cannot invest in all the companies, only the selected whitelisted companies. So the whitelisted companies mean the companies which are not involving interest, tobacco and drugs, and moreover, financial burden. So they just believe the concept of the burden of having loans and interest burdens the families, not only to one community but all the community. So these risk management plays a crucial concept in Amana Taka. So next, I call one of my member.
Risk attitude is a mindset towards the risk, like a kind of willingness to take risk. And as for this Amana's approach, in terms of investment, it is more towards the conservative and Sharia compliance. As previously told, it does not kind of it is a law which does not pay any interest-based investments. So next is about the reputational risk, and that is more towards the zero tolerance. It is more near towards the zero tolerance, which is as per this organization, they are more reluctant towards the factors which affects the reputation of this organization. And operational risk is something they are implementing more controls, and they are providing more training opportunities in order to minimize this operational risk. And the types of the risk is about the, there are three types of the risk: and strategic risk, business risk, and operational risk. When we talk about the strategic risk, they are implementing so many regulatory shifts, such as regulatory shifts, changes in the factors in the economic and market conditions. And next is business risk. They also have implemented some pricing risk and economic downturns and slow market growth. So next is operational risk, how they implementing it. There are so much of IT failures and fraud movement of data breaches. So to mitigate that type of operational risk, they use IT upgrades, audits, and fraud detection. So this about my part and this. Actually, this is not Mana. But that's it. Yeah. So this one is commitment and application. That one is category. First one is operation approach. This one is management.
You have to explain. For that side. Yeah, Jack. So you have to explain what you mean by the conservatives from for the what you mean by you explain that right. You have not explain, just keep.
Reputation scheme, venture capital, experimental R&D, operational strategy.
I can't understand this slide. What do you mean by this slide? How it's related to the huh? How it's related to the startup further?
I think we are just analyzing how the risk works in here. It's moderative, conservative, strong focus.
That's correct.
Yeah.
But how the reputation coming up?
I would,
What is the link here? Who prepared the
like
site?
3 times.
Who prepared the site? All right. What is the purpose of? So, normally, when you are presenting, you have to prepare your site. Okay, go ahead. Go ahead. Go ahead.
Manage risk options. For this case, risk identification. There are two types: risk, compliance risk and operational risk. Fourth one is monitoring. Respondent is financial and operational. This monitoring example is COVID-19 digital platform for operations.
Go to the slide. So you are explaining the risk management process, right? Yeah. Okay. I understand what.
Foundation for risk management. The key practices: mana, ban, leadership role, ethics, and transparency. Data supervise board compliance, voice training, and preparations. Example is automated cloud reduction in class A.
Management, mana called as PSC. The board ways, P ways, E roles, management, according to the Sharia complaints and authorities. There are key responsibilities are there. One is defining this appetite and tolerance. Basic comprehensive scan appetite tolerance. This means deciding how much is going to take. And for example, Amana follows a safe approach in investment and client. That's right. Except some areas like meeting innovation and expansion of business. Second responsibility is overseeing ERM. This means helps manage operational financial compliance and reputational risk in coordinated way. The one is consumer compliance and governance.
Like this time. Conclusion is there?
Yeah. So that's how I thought and try to conclude it. So Amana of life third is one of major financial institute when it comes to finance in terms of Sharia compliance. So what we wanted to convey in our presentation that about how Amana works, the ERM process, about how the management process concludes, and some details about Amana and how they were doing those operational, financial, and the Sharia compliance things when it comes to risk. So yeah, that's it. And then one of a major example for that conclusion is during the COVID-19 period, when everything was digitalized, the need for insurance got down. So in that time, Amana Takaful came up with this digitalization process, have policies on online, and created a very innovative approach in doing the and risk management process. So that's one of a highlightable area which I wanted to present over here. So yeah, I would like to conclude here. Thank you, sir, for your time and
Thank you. So my first comment is, when it comes to your presentation, you have not done a great work. I agree. When you're looking at your presentation, just copy and paste and up there. When you're presenting and when you are preparing a presentation, it should be attractive to the audience. And also, most of the important parts will not be highlighted. So when it comes to Amana Takaful, it's a kind of a different industry with the Sharia compliance. Right? So you can highlight different aspects of the risk. Right? For example, when it comes to this insurance company, the main risk, as you highlighted, one is the claim risk. Other risk is the underwriting. So those things are there. And they are having the investment risk as well, because they have the kind of a different compliance. So therefore, the investment is very limited.
So I just told us about whitelisted companies.
But that's the only part. The important part is coming out. Right? These are different company. Therefore, you have to present it in a different way. Have you mentioned about the underwriting risk? No? Right? If it is the underwriting risk should be there. And what happens to interest? What is the situation now?
Interest, they are only interested in whitelisted companies where there's no interest, only the riba. So riba means not risk, interest. It's a kind of a profit share they are. So in that way, I explained the word riba.
Come to the report also, your present I'm asking the risk, but not risk the company side. You are not present. The one risk is yes, you are in a different compliance. That's a kind of major risk is different from other companies. But other strategic risks are highlighted. And what are the mitigation strategies for that? So if, let's say you are having a kind of a compliance risk is there, right, for the insurance, for the investments. So what kind of mitigation strategies they are taking as a board?
The Sharia board, they have appointed, they regulate.
Well, you have mentioned
Sharia board, like,
it's only Sharia board. So what is the mitigation strategy I'm asking? Hard. That's good. Groups anything else? I'm going to share. That's my answer. How do I? What happened to the people? It's not proper coordination. So they group you're continuing. Why then you are? Working every day. But I need to mark so now you mark what doesn't acceptable. What to do next time? Right. Group number 4. 78, 83, 23, 73, 39. All these. All right.
Good morning, everyone. Today I am going to here to present the enterprise management and lower economics PLC. So first of all, Reverse Holdings PLC started in 1980s as a Lanka Orange company, leasing company, with the support from Japan Orange Corporations. So today it has grown into diverse, the Sri Lanka's largest diversified conglomerate. listed in Colombo Stock Exchange. So the businesses are covered by such as financial services, leisure and tourism, and leisure and tourism, and insurance, global investment. So their main strategic focuses includes global diversification and innovations, client-centric services, and sustainability and managing risk through diversification. When it comes to the risk and risk management, this is the possibility of the event that affects achieving objectives. Traditionally, the risk viewed as the only threat, but today it's also viewed as opportunity if we manage well. So, risk management is the structured process of risk management, is the structured process analyzing, identifying, and respond to the risk. So, understanding the risk and understanding the risk and risk management for LLC, which is operate in multiple countries and industries. So enterprise risk management is critical. So, so the LLC through faces diverse risks such as liquidity risk, credit risk, foreign exchange risk, and foreign exchange risk and regulatory changes. So the ER enterprise risk management helps LLC to manage this risk with integrated and consistent way. So then also smart will be explained.
The markets. It's going to be investing in market finance, it's going to be leading highlights global, regulatory and current base. This kind of risk appetite, becoming globally diversified and conglomerate. There are some segmental differences in risk appetite. First one is financial services. LLC makes moderate risk in financial services because of rules and responsibilities to protect investors. The next one is plantations and agriculture. The LLC shows high risk appetite in plantation and agriculture due to the factors of like commodity price, climate, and global demand. The next one is leisure and real estate. LOSC is cautiously optimistic in leisure and real estate about market cycle investment, so confidence in long-term recovery and profitability despite short-term gain. Moving on to the governance, compliance, and managing risk appetite. There are key components. First one is board oversight by risk committees, dedicated committees who regularly assess and monitor appetite level for a variety of risks as they include emerging risks that may have an impact on its appetite. The next one is enterprise risk management. Process which are in line with international best practices that allow aligned oversight of financial, operational, and strategic risk simultaneously. The last one is compliance processes with focus on financial sector. LOLC is particularly attentive to compliance process in the financial sector, including adherence to prudential guidelines, anti-money laundering, guarding, and norms for maintaining capital adequacy. So in here, I would like to talk about different types of risk in LOFC. So first of all, strategic risk and LOFC. So in here, strategic risk arise from long-term external uncertainties that affect overall objectives, expansion and diversification, like different types of areas like insurance, financial services, and plantation management. Key strategic risk international growth and geopolitical arises from instability and trade restriction, and also macroeconomic as market, which arises from inflation and interest rate likewise, and also when it comes to the climate change and environmental, basically LLC under LLC there are plantation businesses, so extreme weather, compliance costs and plantations, energy give concern and risk to the company, and also when it comes to market and consumer trends, demand shifts towards sustainable and also eco-friendly products give some risk to the risk. And also when it comes to the business risk and LOFC, so basically which means risk arises from operation and financial process. And also key business risk are credit risk, liquidity risk, foreign exchange risk, and reputational risk, and regulatory risk. And the credit risk which means as an example, when this is financial service provider, so when a borrower didn't repay the loan, that kind of risk is impact to the business. So to mitigate that kind of risk, they use credit checks and diversify its loan portfolio, and also closely monitor the non-performing loan. And also when it comes to the liquidity risk, basically it's related to the cash flows in the organization. This managed via liquid assets and facilities. And also when it comes to the foreign exchange risk, basically LLC earn and invest through foreign transaction. So in here, foreign exchange rate is directly impact to the business. So they use hedging here and also use natural offsets. And also when it comes to the reputation risk, it's like service failures and publicity, and managed through governance and stakeholder engagement. And when it comes to the regulatory risk, basically it's like changes in rules, etc., and managed via compliance framework and training. And then when it comes to the operational risk, which means like internal failures and also interruptions affecting daily operation. So in here, as you can see on the screen, cybersecurity risk, employee turnover risk likewise. Let's go one by one. So the first one, cybersecurity and IP failures. So basically like breaches and outages. The company can mitigate that via firewalls and audit, and also the employee turnover and skill gap. Basically, it impact to the productivity loss, and also they can mitigate that with trainings and with good salary, and also the substitute risk. They can manage those things like inventory buffers, likewise. And when it comes to the equipment and infrastructure failure, basically it means service interruption. They can mitigate those kind of risks with the maintenance and with the backups. And when it comes to the last one, health and safety risk, the NOLC business has construction and plantation businesses. then they can mitigate that kind of risk with the safety trainings and stance. So I would like to invite Tanya to continue this. Identified financial groups, LOC has adopted the ERS framework based on international principles and let's move on to the governance structure. When it comes to the board of directors, they take the ultimate responsibility of this oversight, and they are supported by the audit committee and the risk management committee, who regularly reviews the exposures and mitigation plans. And the group risk management division ensure the centralized monitoring and reporting. Let's move on to the steps of the ERM procedure of emergency. So, first step is risk identification. Risk is identified under strategic, financial, operational, and the compliance risk. The second step is risk assessment and measurement. So LLC uses both qualitative and quantitative methods. For example, credit risk is measured under IFRS 9, expected loss credit, expected credit loss models, and there are the liquidity risk is measured through the gap analysis. So the third step is risk response and mitigation. So the responses are depend on particularly transfer, avoid, reduce, or offset. Fourth step is monitoring and reporting. So regular monitoring is done through internal control systems and management reporting. And also committees and roles. This is timely updates to take corrective actions when needed. And the fifth step is review and continuous improvement. So when it comes to LOLC, it uses regular framework and policy review to ensure staff are trained under LOLC embeds a risk-aware culture through training and development process. So I would like to invite leading control and governance. Maintain a strong internal control environment without governance concerns. Oversight is provided by the audit committee and integrated risk management committee in line with COSO framework, ensuring reasonable assurance of operations, reporting, and compliance. These controls are not only reactive but also proactive, since the governance is embedded into daily processes to address the risk from LOLC's diverse global operations. Financial service leader, LOLC places high importance on cyber risk management. With the expansion of digital platforms like iPay, the group invests in IT infrastructure and security protocols to safeguard customer data, build trust, and maintain operational resilience. And the board of directors plays an ultimate role in shaping risk culture by setting the risk appetites and ensure that awareness extends across all the levels. Oversight is exercised through governance report, committees, and executive reviews. While theory emphasizes the accountability at the top, LOLC adapt these principles to its diverse industries such as managing risk in credit risk in finance and climate risk in communications likewise. Next, Board of Leadership and Oversight in Risk Management. The Board of LOLC plays a vital role in shaping the group's overall risk approach. It is responsible for setting the risk appetites, ensure that the level of risk undertaken is consistent with the group's long-term growth strategy. At the same time, the board balances this appetite with strong compliances and governance mechanisms to safeguard the stability. Next, how LOLC board oversees the credit risk and management in subsidiaries. A clear example of board investment is seen in credit risk management. Lending forms the core of LOLC's financial services operations, and the board ensure robust credit appraisal systems, provisioning policies, and portfolio monitoring. This oversights the critical volatile markets, helping the group manage non-performing loans and maintaining financial stability. In next, the applicability of COSO ERM framework. The COSO ERM framework
So you are reading slides. Slides. Take time. Just put the paragraph to the side and just read it. What's the point of reading that? You have to present to the audience. That's what you have to do. Why? You are not practicing. What is the meaning of applicability of the course of ERM framework?
LOLC how they apply their strategies in they match their course of strategies in course of ERM framework.
Go to next slide. Then by you.
LOLC holding operates in complex and
Next slide. Conclude your presentation. Now reading the slides. So what you have discussed, just concluding. The reading slides. No point of reading slides. I can see.
overall, just using LOLC finance to finance about this ERM framework. In here, they are using some strategies to apply this framework. Such
The issue is not with your language. Language depression and visual. So there you are not paying the attention to this presentation. You are not practicing. That's all. Just they are just like outside here no English correct. And I can practice to learn. There's no issue with the language. All right, come here. So when it comes to this LOLC community, what is the main study is there by the LOLC knowledge. So you are taking the group, right? The main study is yes, what is this study? Go ahead. But yeah. You don't have. Yes. No idea. Any risk the LOC is having?
They, and also they have a different kind of areas like financial services, plantation, insurance, like
What is the main sector? Then obviously exchange rate risk will be there. There's any other? Any other related risk? Credit risk. Credit risk. Okay. Other than that, any main risk that as a group they are facing? Okay, let's move into the plantation sector. So they are including the plantation as well. So what kind of a specific risk for the plantation sector? Okay, how they are going to mitigate that? What is the meaning of climate risk and how they are going to mitigate?
and focus the they can get the guidelines from the department, the focus the department, and they can
Yeah, like the other collector nothing. Like the other.
they can yes,
Yeah, whole plantation sector is CEO over more than that. Why is it? Why not you? Why not? You know why? So some
they can update and paint the use the or we have to use the
rubber gas in the window. So when it comes to climate risk, they are using different kind of strategies like they are shifting with the crops. Like let's say in the dry season, they are having a different kind of plants. In the wet season, they are having a different kind of plants. Right? And also, if they are not performing in the plantation sector, so they are get some help from the other sectors for the plantations. Even other again, operational litigation. Operational risk development. Strategic risk and strategic formulations. So the strategic formulation can are them then පහින වෙලාවට ගියක් හදනවා කියන operational risk management. So the strategy දැන් හැම වෙලේම වහිනවා. ගියක් හදනකොට දෙපෙන්න. ඒක මොකද? So අපි strategy එකක් හිතමු. ලංකාවේ ඉඳන් රටට. There is a strategic approach. So ඒ පහින කාලේ හරියන්නේ නැති හරියන්නේ නැති plant එක dry කාලේ වෙන plant එකක් හදනවා පහින කාලේ වෙන plant එකක්. ඒ වගේ. Clear? Thank you. So when it comes to this presentation, don't do like this, right? So you need to prepare the presentation in point 4. So otherwise, I can't read this. As an audience, I need to get some understanding by reading the slides. Don't read the slides. Practice well and not. Yes, group number 5. Clear. Group number 5. Okay. Full effort at the display.
It's like you can when I'm doing the math, so I can't compare right? But I give marks for the paper. We go to have so much of marks for the paper. No, okay, I'm giving marks. But here I'm a disappointed. That's the point. That's not my girl. Not my girl. You are not a good group. But the thing is, I need to compare with others and I need to give the them. That's what. If others are presenting very well, I have come. I will compare the others and give the mark. That's how it goes. No, I'm also giving the individual marks as well. And the individual marks as well. It's not looking at the group perspective, but if someone is performing less than the others, then definitely that's what I mean for your feedback. That's there's a Brahman is there. Brahman is there. That's the Brahman. But she has done, I can't understand anything. I don't understand that other girl that we said she had to live with the class. It's just see, right? It's not worry. Right, group number 5, right? Let's start. Yes, just start.
We are present on decreasing the PLC and its approach to risk management. These are our group members, and these are the key topics that we present. Okay, this simple PLC is founded by Colombo in 1970. It's in hospitality and tourism sector. Create to space celebrating Sri Lanka, state the culture and heritage. Strategic focus on monitoring ecosystem, tourism, industry travel experience. Public investment, all the competitive manage 7 luxury premium hotels and across the Sri Lanka. Economical risk management. This is the effect of uncertainty on objectives which can lead to positive and outcome negative objectives. Economical risk management is the systematic process of identifying economical risk that may affect on organizational operation and services. In technical PLC, can identify risk as the fluctuation in global demand. External factors that economic downturn, infection, like COVID-19 pandemic. This assessment approach that they use is this heat map approaches by likelihood and impact. They categorize into three main groups: strategic and market risk, operational risk, financial risk, and the key impact of decline in demand for hotels and higher expense for supply chain measures and financial challenges from regard for fixed and cash flow. They use risk management strategies include active monitoring and local economic conditions and cost control and resilient planning. The scenario testing through performance and through rates and cost actions. They have seven luxury hotels located in Sri Lanka, and they have luxury hospitality services, and they want to be clients sustainability. There is attitude their approaches towards managing this while innovations and expansions, and their strategic approach are they have proactive risk solutions and calibrated the inherent sustainability some values. And compared to this, other small document and JP, this capabilities, small document and global limited resources by the JP, they have the great high operations and this one capacity, small local hotels, they have conservative approach, but GPs have sustainability. Small local has rights, but the GP have micro locations and segments. So forward Yeah. Maintain clear communication with kids. Okay. Cybersecurity attack. It's to lots of segregation, data, compatibility, and also its bad loss. There, address this as cyber assessment and also so that's the same finance for your Firstly, ERP is the structured approach that organizations help identify, assess, and respond, monitor, and review risk affected with the businesses. The general ERP process has 5 steps: risk identification, risk assessment, risk response, risk monitor, and risk reporting. And generic PPDPLC also used the same process. Generic PPDPLC risk identification, they group 3 main steps. 3 main issues. They are strategic, operational, financial risk. Examples: pandemics, political instability, cybersecurity, financial risk. Risk assessment, the company uses risk heat map. It is based on likelihood and impact. The red one shows high priority risk. The yellow and orange ones are show medium risk. The green ones are show low priority risk. And as risk process, they use cost control ISO 14001 staff training. Risk monitoring and the board and management track risk with internal audits and compliance reviews. As risk reporting, they quarterly reported reports, and the important ones are disclosed in annual report. Now, why ERM is important and necessary to executive efficiency? Because tourism is one of the most tourism is the one of most sensitive to industries. Without proper risk management, the risk seriously affected to the business. At PLC, these are the high priority risk and responses. For example, infectious diseases and pandemics, the responses are market diversification and contingency plan. As the mitigation strategies, they use crisis management protocols, safety measures, climate changes and natural disasters. The responses are integration of sustainable practices and disaster preparedness. As mitigation strategy, ISO 14001 renewable energy adoption cost reduction, gas safety and food standards. The responses are continuous training and compliance with standards. Mitigation strategies are food safety certification, regular audit. Also, PLC has applied ERF process into different departments. These are tourism and hospitality, sustainability and environment, management, technology and systems, financial management. In tourism and hospitality department, is associated with demand, pandemic, political unrest. The technology and systems with cybersecurity, threats, IT, system failure. Financial management department is associated with exchange rate volatility, interest rate, and liquidity constraints. Policy. Of that, we also focus on employee environment and trading. So also we do ultimately different ensure democratic social for adding also involves for the activities. It is a coordination for employees minority risk, fostering transparency, and also integration at all levels. Risk management should have all staff from fulfillment to home. Let's move to board responsibility. Board responsibility is governance. So there are two types of board responsibility. Anybody is culture. Board roles are good governance are oversight and approval of limits at the village, appetite. It is so beautiful. And leadership team and business responsibility, shared responsibility, also sustain
So when it comes to this company, so what kind of appetite they are having? This appetite. Kind of a risk appetite getting yes.
services.
So I'm asking what is the risk appetite? What is the level of risk they are taking? Whether they are taking high risk, low risk, high risk. So how they are taking the high risk? What are the things they have done? So if you are saying that they are taking high risk, their appetite is very high level. What kind of things they have done? Because wedding around කියලා කියන්නේ කොහොමද? Then I'm asking how they are taking the risk. What are the things they have done? Practical. One is, as she mentioned, there are 7 hotels, so they are working for the expansion. Something hotels are there, just the electrical, the EV stations are there. expansions will definitely understand. I'm asking how they are taking the risk. මොනවද කරලා තියෙන්නේ? රිස්ක් එක ගන්න ඔබ කියනවනේ එයා හයි රිස්ක් කරන කෙනෙක් කියලා. ඔයගොල්ලෝ හයි රිස්ක් කරනවා නම් මම මොනවද කරන්නේ? හයි රිස්ක් එක කරනවා. ඉතින් ගෝල් බේස් එකේ මුද්‍ර පයි. ඒ රිස්ක්. එහෙමයි. ඉන්දියාවේ යන්න ඕන නම් 3.5 ගෝල් බේස්. ඒතර ඉන්දියාවේ මොකද? ඒ වගේ. හරි ජෙප්පීල් එක මොකක්ද ගන්න රිස්ක්? මොකක්ද ගන්න රිස්ක්? ඒක තමයි එක්ස්පැන්ෂන් එක. එක්ස්පැන්ෂන්. යන්ත්‍ර coming to ChatGPT. Okay, sustainability investments like they are using the EV charging stations. Right? So normally, when you are investing on those infrastructure, it feels very costly, but we get the benefits in future. And also, they are maintaining a good debt to equity ratio. They are focusing more on the debt. When you are looking at the group structure, I think 50% they are taking 60% of the what do you call the funds are generated through the debt. It means risk. I got to get risk here. Those are the things they have done. That is why we are considering this company as a high risk appetite company. Kind of thing. Put number 6 in the air. You know, open it. Just click there. Yeah. No. Yeah, click and presentation. Go to click. Work करला. Work करने को. 98 09 003 74 99 101. You are not upload still, yeah. The deadline is 11:59 p.m. Is that? Everyone give you. Yeah, just got it. So then she don't feel yeah. Applicant. Do we have the pen drive? Not the pen drive, but 2 marks will be deducted for the non-compliant. What? At least you have to upload your presentation before the deadline. Then you can do the page. I have to reduce 2 months, right? Otherwise, it's not. They have others. They all are uploaded before the deadline. That's why. Okay. Pendrive with that. Pendrive with that. I know pendrive with the in group it again. Pendrive with the pendrive with plug. Pendrive with the group close out again. No, you can't plug the cable because go with the left of that. Look outside. Please remember.
No.
Yeah. Join in the online. See the what you about the back. I think call underwriting. One may stop sharing the love. Oh. Make it look make it linking and have a look. Are you going to group make it out? Yeah, look at it. Look at it. Make open link again, then what look at it. Like that. How many phone calls have it?
Oh, obviously.
I am going to email one member is busy in the 40 group. So he has informed. So the person GOG need to inform. What has happened? What is it? That way. I think that's the all right. I remember. Yeah, in the very moment, they are again, my email got done here. Medical report is submit before 7 medical report submit medical report submit presentation. Yeah, report reporting marks allocation presentation marks on quantitative assignment medical submit legal submit physical submit and then join it well. Pulvanikil Balan make it join it. So the day wedding, right? Which one can on camera again? You guys need to be professional, right? So if you can't participate with the presentation, you have to. Otherwise, the copy like that, that's nothing in the way. So if you are not done the presentation, so you can't do the final examination. That's right. So Nandini, okay, go to the presentation. You know, back when go back. Right. Thing again, time again.
Hello. Mga. Oh, logo.
Okay. Let's 98. 098. Got good numbers, right?
Yes.
Zero 24. 30. 88. 71. Yeah. 101.
For the absence.
What happened to you? Can you hear me? Jitpi. Jitpi, can you
Yes,
hear me?
sir. Yes, sir. I can hear you.
What happened to you?
Sorry.
What happened to you?
So my back pain and I have leg cramps from the Friday onward.
Can you switch on your camera?
Yes, sir. Wait.
All right. You can start the presentation.
Okay, sir.
In hand, body breaks. CIC holding user is subject to use in environmental friendly plans and advanced monitoring techniques. Second, healthcare and chemical benefits product quality and regulatory procurement. Let's talk about the risk appetite and risk attitude. Risk appetite means how type and level of the risk company is ready to take to achieve its goal. Risk attitude is how employees and owners think about the risk, how they feel about it, and how they react to it. Both are important to company because they affect to the day-to-day operations, business decisions, and the organizational strategies. As example, let's think about CIC Holdings has low risk appetite. They may choose stable areas like agriculture and crop sectors, which may bring to the company stable and reliable growth. If CIC Holding has high risk appetite, they may choose biotechnology and export areas, which may bring to the company higher growth, but also uncertainty. Let's think about the risk attitude. If the company has more experienced staff on healthcare and agriculture area, it's bring to the company. They can bring to the company more experience on their past experience to operation on current. So it may bring to the company's day-to-day operation. They can use their experience to day-to-day operation. It's a main strength to company. So I think in shortly, if they can have a good understanding about their attitude and appetite, they can grow in safety way and more innovative way and reliable way. So let's hand over to Ravi.
I'll be presenting the related to CIC holdings, which can be divided into three main types. First one was strategic risk. These are long-term challenges that can be highly affected on company's power or direction. For example, CIC relies heavily on importing their raw materials. Foreign currency was restricted. Their costing margins will be high. Second one was business risk. These are more medium term and relate to CIC Holdings financial and commercial model. A key example is liquidity risk. If agriculture yield fall, cash flow reduce, but debt obligation remain. Third one, finally, operation risk. These are short to medium term disruption in daily operation. This includes supply chain interruption, health and safety incidents in production sites and cyber security attacks. So insurance, delayed shipment and ransomware attack. Over to
So I'm going to talk about the enterprise risk management. So enterprise risk management is an integrated way that we can identify managing risk in the overall organization. So it's just not like the traditional risk management that some organizations are using. So in the enterprise risk management, mainly focus on internal and external as well as external environment issues that based on the organization objective. So there are 5 steps in the enterprise risk management. First one is identify risk. Without identifying the risk, we can't make any decision to avoid that issue. So we need to identify the risk mainly. And the second step is assessing the risk. And in this step, we need to evaluate what is the impact that risk into our organization. And the developing risk responses mean we can develop several options to overcome that issue. So we need to develop the risk response before implementing the control. So in the implementing control, we can make some resource adjustment or movement through the step in enterprises risk management. So finally, as a final step, we need to monitor and reporting continuously whether that enterprise risk management is working properly in the organization, or whether we need to make any changes on the risk management. So nextly, necessity of the ERM. So necessity of the ERM means that we need to focus on mainly safeguard our data and resources. So we need to improve our management, and every data is reliable and safeguarding within the organization. And when we talk about the benefit of PRN, in CIC, there are several industries that they are working on, like healthcare, agriculture, and consumer. So we need to make the enterprise risk management based on the organization that we are looking. So, if, as example, if in the agriculture business, if we're facing some certain issues like weather issues, so we need to make the enterprise risk management based on the organization environment. When it comes into the benefit of PRM, we need to ensure that consistent standard data we are using and efficiency allocations of resources through the enterprise risk management as well. So over to
So, can you hear me?
Can hear you.
Okay. So, I'm talking about the internal control environment. So, the internal control environment is the foundation of risk management. So, at CIC, this is especially important because the company works in agriculture as well as healthcare, chemicals, etc. So, all are very sensitive industries. So, that's why CRC follows a zero tolerance policy towards risk. So the key practices are shown at the top, where the leadership promotes ethics, compliance, as well as sustainability. And precautionary principle means, such as culling poultry if impacted is suspected, like recalling contained products and returning agrochemical and fail testing. So in supply chain oversight, mean ensuring on safe and reliable supplies that are used. So, when we talking about embedding risk awareness, uh, the significance, the significance of integrating risk awareness at CIC can be articulated as follows. Uh, uh, Protecting consumer safety, like by ensuring that all employees remain watchful regarding product quality and explanation. CID safeguards customers from detrimental consequences. Next, regulatory compliance. Employees receive training to comply with governmental and industry rules, thereby mitigating legal and reputational risk. So next is operational continuity. The risk awareness facilitates the early identification of supply chain disruptions, safety concerns. So sustainability and ESG alignment. That risk awareness, that by incorporating environmental, social, and governance principles, CIC guarantees that SAA adhere to compliance regulations while embracing enduring sustainable practices. So, next one is reputation and trust. So, next, I'm going to talk about the establishing an internal control environment that promotes risk awareness among employees. So, to successfully embed risk awareness, CIC Holdings has established systems, policies, and training initiatives that align employees' behavior with companies' risk culture. So, CIC achieves this through training and development by regular programs to educate uh, employees on operational risk, safety protocols, and ethical conduct training and development, and monitoring and auditing by internal audit compliance, check, reinforce accountability, and identify weaknesses in control. Policy communication by clear communication of corporate policies ensures that employee understand expectations and consequences. So, CIC has established an internal control environment by integrating structured regulations with employee initiatives, ensuring that risk awareness is fundamentally ingrained in daily operations. So, next topic I'm going to talk about overall board responsibility in risk management. So, the board directors bears the fundamental obligation for guaranteeing that an organization possesses thorough and effective risk management strategy. So, at CIC Holdings, the board assumes uh, a comprehensive responsibility by establishing governance structures. As the board has instituted specialized committees, including audit committee, human and capital compensation committee, and nomination committee, as well as related party review committee. So, approving risk policies, like the board publicly endorse risk management policies and frameworks, ensuring alignment with industries. So the next one is ensuring regulatory compliance, like as publicly traded entity. On the Colombo Stock Exchange, CIC must adhere to the Code of Best Practice on Corporate Governance in Sri Lanka. So the last one is protecting stakeholders, like the board safeguards stakeholders, consumers, employees, and communities. So next I'm going to talk about the role of the board in overseeing risk management strategies.
Thank you. Yeah. So when it comes to CIC,
Yeah.
they are involved in different sector. So what is the highest sector? Highest. So what kind of a strategic risk they are?
Climate change. Yeah, basically.
The government policies affect the agriculture sector.
Right. What's the term policy?
Like the limitation of prices that they can determine.
What kind of products? What products?
As example, you like they are making eggs, preparing eggs. They can't sell that in a higher price. So there's a government limitation and the high price. So they need to sell that the government regulations.
So normally when it comes to eggs, right? So production price, I think rupees, so 300 rupees, so 500 rupees. Higher amount of revenue from that, even though the government is the set price. But they are reducing at a high level. So they are faced because of the drought that was very deep. So they are implementing the fertilizer. That you have to use the carbonic fertilizer. That's the issue they have faced. And also when it comes to the CIC holding, they are in their operations mostly in Sri Lanka. I think within the country, 90% of I think they are not done in the country globally. So there's what kinds of issues they are facing other than the regulatory risk.
They find place in the building is there.
For the sectors.
For the suppliers.
For example, local bit. For the computers, one is Vaira. Vaira beams. They are the same line. And other plantation companies. There are some computers. Yes, what are the risks? Just for the climate related risks. So how they can mitigate those kind of climate risks? Other than yes. But this very nice. Now, you see the agriculture products is having a climate related risk. What kind of mitigation strategies they can follow? Let's say you are the CEO. We can do.
Period, they manage their stocks.
That means they are not selling. They keeping it there.
So they manage these stocks. They have a good stocks in a month. They produce some product like jams. If they collect more product in mango in 1 month, they produce more innovative product like jams or
That's the
sauce like.
innovations you can go.
Yeah.
Right. Other than that, that's good point. Normally when it's on climate, so we can't change no climate. Very difficult to change. Why is there not done that? Would I kill the benefit? After going around. We can produce different kind of that. Diversified plant. For a dry season, we can have a dry plant. For the wet season, we can have a wet plant. Likewise, we can manage, and also we can, if there is a climate related risk is there for the plantation sector, we can move that investment to other sector. Cover up that. You need to think in the strategic way. All right. You can throw it online. Online. Then go from 9. The activity. So then she has like 12. So So there's a concern. There's a man student who is having the fight at 12. He's online. Can we take him? Then I will take you. Is it okay? You guys are okay? If it is not okay, I will take you. Okay, ask your rejoice. Take a look at it. So just click on that. Click on one side. Then they are. Then the box. So, and go back. Go back. No. Then- 070. 070. 2030. 070. Not your 2030. Six. That's all. That's a problem. You have to upload the where it should be there. Do you have the what do you call it, the pen drive issue? Pen drive with you also? There. Unavailable. Pen drive with you. Give us the structure. Okay. What's the issue? So just minimize that. Then click on the slides. I'll check the numbers, right? 08, 09, 30, 28, 29. Okay, now. So you can put it to the slide. They are kind of. Then mark. No, that's not. They are there. Second corner. Settings of the coming. And then it a thing. To the other side. There. Home guys.
About Sunshine Holdings PLC. So Sunshine Holdings PLC was established in 1967. It was started as a small venture. Eventually, they grew up and they registered to the Colombo Stock Exchange, and now they are a well-known PLC company in Sri Lanka. So they have over 2,300 plus employees who are currently working. These are the three main sectors they have: healthcare, consumer goods, and agri. In the healthcare, they have pharmaceutical business, also they import medicine, and also they distribute medicine. And they are also manufacturing certain medical devices in Sri Lanka through Vina manufacturing. Consumer goods, they are producing branded tea, and also they are targeting three popular tea brands: Vadavala, Lanka, and Cesda. Agri also they are doing. That is in a small scale though. So these are the main consumer products they have. Dainty is their well-known chocolate company, and in Agri they have banana plantation and also Sunshine Tea. This is the revenue of them. More than 50% of their revenue is generated from healthcare sector. The risk and the concept of risk. Risk is a condition that hinders achieving certain goals. So the management of risk involves the mitigations and the evaluation of a systemic process to identify the risk and reduce the impact of it. Sunshine's risk is also managed by the board of directors mainly. So these are the main risks that we identified in Sunshine: political and regulatory risks. If you take healthcare, there are certain price controls for medicine. To mitigate those, they have suppliers who are also known as principals to release the CIM and negotiate with them. Then exchange risk is also there, since they are dealing with USD in Sri Lankan economy, though still as the USD is fluctuating in a high speed. They have to also take care of the USD fluctuations. So the mitigation is locking fixed exchange rate. They have successfully locked fixed exchange rates also with certain principles. Operation risk, regulatory non-compliance, procedural failures, those are well-known operational risks if you take Sunshine. So the mitigations are segregating the duties, conducting risk assessments, and reconciling the transactions very often. Strategic risk, the geographical tension, and currency violating. So since they are also exporting certain medicines and all,
There is a geographical risk also involved. Governance and oversight risk. Insufficient governance may lead to a big loss in the company like Sunshine because of its volatile nature. Sustainability and ESG risk. Climate disclosure standards has to be submitted. Those are the risks associating with them. Then tax and physical policies. Since it is highly regulated PLC, they have to always adhere with the tax policies and all. So they have appointed internal officers to liquidate and manage the tax planning quarter-wise. So next, my team member will explain.
This is regarding the importance of having an organization appetite in the risk attitude. Basically, risk appetite refers to the organization's willingness to hold the risk, and risk attitude is the person how we go through the risk. So here, as Sunshine Holding PLC, the risk appetite and risk attitude is has established a comprehensive risk management framework, and also that balanced approach to risk taking characterized by integrated risk management framework and a three defense model framework. So integrated risk management framework refers to where the Sunshine Holding PLC is regulated by the, as it is PLC, it is governed by the Security Exchange Commission, and they have to mitigate the potential risk while leveraging opportunities for sustained business growth. And the three line of defense model, because the first line refers to the operational risk within the functional areas, and the second line refers to the risk and compliance. Unit develops methodology policies. And third line refers to the internal and external audit to provide independent assurance regarding the efficiency of the management framework. So these are the lines of defense model. And also, when you're speaking about the acquisition flexibility, comprehensive risk management, and strategic focus, the acquisition Sunshine Holding has strong capacity and its current rating to pursue merge and acquisition, showing a flexible growth approach. The comprehensive risk management says us forward-looking system to identify, assess, and mitigate financial and non-financial risk. And also, the strategic focus is in 2024-25 effort centered on expanding manufacturing, enhancing efficiency, and strengthening presence in healthcare, consumer goods, and their agribusiness, aligned with this appetite. So as discussion of risk appetite compared to HEMAS PLC, influencing the approach to risk management and Sunshine Holding PLC. How we compare with the HEMAS PLC, how it influence that approach, risk approach. So Sunshine Holding PLC is very structured, has a structured appetite providing stability and a long-term value creation. So they basically see their appetite, and when compared with HEMAS PLC, they do like in proactive way. So that was the comparison we compared with the HEMAS PLC. So the something like.
Yeah, so yeah,
Yeah.
so
Vinay, can you hear?
yes, sir, can hear. Can I start now? So I'll be talking about the differentiation of risks related to Sunshine Holdings. So when we take the risk, there are three types of risks which are associated: strategic risk, and then we have business risk and operational risk. So strategic risk is a risk arising from like long-term external changes or like strategic decisions that affect competitiveness and future positioning. So if we take examples related to Sunshine Holdings, it's basically the shift in consumer demand toward herbal or organic wellness products in healthcare and others their sectors. So the main causes of this were like changing consumer lifestyles, and also their growing awareness of health and sustainability and competitive innovations. And if we take the implications of these strategic risks. These are loss of competitiveness and also the market share fluctuations, limited growth in emerging markets. So the possible mitigation that we can take in this situation is diversify into organic or herbal products, invest more in research and development innovations, and also monitor and respond to consumer trends. Then if we go to our next risk, which is business risk. So business risk is so this is an example. So business risk is mainly the risk affecting the profitability and financial positions of the due to the market conditions, cost or competition. So if we take examples for this, it's volatile in tea or grape business, global tea price fluctuations, and also rising local input cost. So the causes of this is mainly due to commodity price volatility, rising wages, and also if there's any climate changes affecting. And if we take the implications of this is due to declining profit margins and volatile earnings, reduced investment capacity. So there are some possible mitigations for this, which are like cost efficiency programs we can take into place, diversify crops and markets, use hedging to manage price risk. And the last risk is about the operational risk. So operational risk is the risk which is associated from internal processes, system or people that disrupt the daily operations. So these are the examples when it comes to cyber attacks on healthcare supply chain platforms, disrupting the medical distributions. So the causes of this were like heavy reliance on IT systems, weak cybersecurity controls, human error or like any system failures. And when it comes to implications, these are like due to the medicine supply disruption, data breaches, and penalties. So the possible mitigation we can take into place is like strengthen the IT and cyber security system, conduct regular audits and staff training, also to establish business continuity plans.
I will talk about the enterprise risk management. It is a system approach that uses in the organization to identify, assess, and manage and monitor the risk which are in the organization to achieve their strategic objectives. Sunshine Holding PLC, we find we have used the steps of the ERP. First is risk identification. First of all, we will identify the internal external risk through the workshops and some analysis. Next is risk assessment. Second step is after identifying the risk, we have to assess the risk, what's the probability and what's the impact using that risk. And we use heat maps for that. Next is risk response. For responding to that risk, we have to use STAR framework. If there's a low probability and low impact, we have to accept it. If there's high probability and low impact, we have to reduce that. And if there's low probability and high impact, we have to transfer it. If there's high probability and high impact, we have to avoid that risk. So as per that, we have to respond for the risk. Next is control activities. We have to, if we are controlling that risk, we have to implement some policies and procedures. And we have to do some compliance checks and audit for that. And next, after controlling, we have to monitor those whether they are done properly or not. And we have to communicate with the board, with the risk committees and those. Sunshine Holding PLC and Sunshine Holding PLC ERP provides a structured approach to anticipate and manage and respond to their risk. It enhances their patient safety and regulatory compliance and build trust for the stakeholders and improve their resilience against the crisis while aligning risk management strategies to achieve their goals and support the group's vision
of creating a better working world. Next part will be blended.
Organization. First of all, the internal control environment. Healthcare and farms, they have internal control they have to follow up. The healthcare versus healthcare pharmaceutical quality, they have to comply with NMRA, GMP. It's IT security. They have to comply with they have to conduct ERP security audits. IT risk committee ensures protocol compliance. Then financial discipline, they have they monitor the capital structure and they maintain a conservative leverage to the resilience. And they comply with the ethics. They have strong code of conduct and whistleblower hotline. And they have supply chain management and employee development and retention. The importance of embedding the risk awareness throughout the sunshine policies, decision making. The employees have to escalate the operational issues quickly and enabling faster corrective actions. And strategic resilience. The risk awareness help manage external shock like currency fluctuations and regulatory changes. Stakeholder trust. They have supply chain healthcare compliance, then strengthen the trust with the regulators. Next, sustainable innovation. A risk conscious approach support the growth in renewable energy and health tech. Establishing the that promotes the risk awareness among the employees. That is leadership and governance. The board and the senior leaders emphasize the risk management in the meeting and the communication and risk management policies. Framework cover the pharmaceutical quality and all. Training program like sector-specific training. Then internal control environment. Internal control like budget approval, ERP integrated compliance, and regular audits, open communication such as whistleblowing and grievance mechanism.
Right. Done, right? There's another slide. People. Moving.
The overall responsibility of the board.
All right. Okay. Okay. So based on this company, right? Major revenue generator is pharmaceutical, right? Yes, then. So what kind of issues for the strategic they are having in the business?
The government for medicines.
So what they have done to mitigate it?
The exchange rate and also change in the circulating revenue. Then they will cover the promotion which
There's another government regulation coming up for them, like, as I know. Somebody is saying not to buy from the what you call the foreign suppliers, the medicine. Try to get from the locals. What kind of a mechanism they can use for that?
they already have a manufacturing plant in Srilanka. They can also, it's a long term plan, but they can also start manufacturing certain medicines like things.
Is any other risk they have faced in any other sector? When it comes to plantation sector, how they are managed. So they are basically they are involved with the tea, right? So let's say, but what kind of risk they are in the plantation? Especially for the
They are the actual key sector in Sri Lanka because they are covering all three kinds of, like for low income earners, they have non-farm for middle income earners, they have the largest distribution, and also they are covering the high income earners through system. So they are quite stable than healthcare because healthcare currently gains first place and the last quarter second place. So,
They are not going to invest more on the tea. So with the healthcare is the main oriented.
the thing is mainly, I think, in the Sri
They
Lanka.
are not exporting.
They are also exporting, but not in a large scale. They are exporting in a small scale.
Why? According to you, why they are not moving to the telling that the plantation sector is moving well than the health sector? Why they are not investing in the plantation sector more? Why they are moving on to the health sector?
Export them, they have too much legal appliances, so that they have to cost much.
The thing is, as per my understanding, the thing is, the medical plantation sector level is not large, right? So market is not large than the healthcare. අපි නමෝට මාසෙ වෙනකොට healthcare sector එක තමයි revenue generate කරන හොඳම තැන. So that's why they are keeping the main resources in there, even though they are not the market leader. They try to be a market leader. That's all. So when it comes to climate changes, how they are addressing that climate change? Any other method? The main product is tea. So now there's a climate change. Let's say tea is having a kind of doing some tea, and some regulations are coming up. So there's a because of some climate changes, we can't produce the appropriate level of tea. So what we can do?
That we can increase their healthcare sectors again, can invest more so that
To cover up the
By
plantation, yeah, that's correct. To cover up that loss from the plantation, you can first to the healthcare and then you can cover up the plantation. That's one strategical. Other than that, when it's complete, stick with the plantation sector. Right. So they can go for the diversified plantation, like different plantations, different types of plantations. The tea is not considered, so they can move towards a
climate change is we can't
control it. Yeah.
yeah. So we should try to mitigate from those.
I'm asking how to mitigate. We can't change it, right? That's correct. So how to mitigate it? So we can, as you said, we can move to the other sector and cover up that loss. So we can't mitigate it. And other ways we can have, like you said, we can have kind of a different ways. Plant your plants, like tea plants. But else, you can go for the other plants. Very good. Thank you.
Thank you, sir.
Professor. 98, 03, 99, Your
Morning. We are here with the time. Enterprise management and governance practice, practices, and loan fees to company.
no. Yeah.
These are the members.
Can you have your report? Report. Copy and paste to. Okay. Now upload the note. The upload the. Alright.
These are the members. These are contents today we are going to have. Introduction to loan is efficiency and concept management. Important for the assessment is advocate and attitude. Appreciation of related to loan fees holdings. AR process schedule loan fees holding and internal control environment and awareness and role of the holding the risk management. After the introduction part, Benefits Holding PLC is the largest listed conglomerate on the foreign stock exchange. When the exchange then become leader in Sri Lanka corporate sector, which the recently and dating back to the 1870. And the Benefits Holding Private Company provides operates all the 89 legal entities for the supplement growth and also the strategic investment. The Notice Holding Company operates in multiple industries like hospitality, transportation, logistics, hospitality, hospitality, retail, IT, and the financial services. And also the Notice Holding PLC is plays a big its role in the Sri Lanka economic gain. Over to the subject to the Thank you, Sampan. Now we look at the it's part of the geography's holding. First of all, what is risk? Risk is possibility that in future uncertain events occur will affect the growth of the organization either negatively or positive. So when it comes to risk, there are two parts: upside risk and downside risk. Upside risk is that is the type of risk that favorably affects the organization. For example, favorable exchange rates, and downside risk is a risk that adversely affects the organization. For example, drop in sales. And the key risk areas that guarantees for these are market and economic risk, operational and process risk, strategic and business risk, and regulatory and compliance risk, and finally, environmental, social, and governance risk. So, how risk management approaches of Donkey's audience, first of all, identify and assess and mitigate risk proactively. In here, they do not face the risk at the moment. They proactively do their activities in order to mitigate the risk. And the next one is top-down and bottom-up integrated approach.
This is the senior level board management, operation level job management. We are trying to focus on mitigating this. And quarterly business level review and sector consolidation. This means the board level assess the risk at the media of the organization. And the next one is biannual group level reviewed by executive committee. The executive committees, they do not actively in detail. They do not involve in the this process, but rather they develop frameworks and strong policies in order to mitigate the risk. And the next one is this appetite set at group level and reported annually. This means they focus on aligning their risk at strategic level. And the final one is audit committee and board review previous and updated policies. They develop policies and review monthly, quarterly, and annually to mitigate the risk. With that,
Explain about the type and the one is type. The modern type of an organization is within include with the organization and goals. Things like how much uncertainty the company is ready to accept for growth and innovation. The next one is executive. The organization approach or mindset towards when making decisions. It means like it could be in the risk. It means to avoid the risk. Another one is risk neutral, to take the risk in moderate level. And that one is risk seeking, willing to take the risk, willing to take the high level risk. Then to manage risk effectively, companies use risk management tools like this one is metrics. Which measures risk by their probability and impact. This helps organizations prioritize and prepare for potential challenges. Then another one is high priority, such as regulatory compliance, market competition, and economic development. Next one is I'm going to talk about the comparative risk. John Keats holding between the John Keats holding and LSTLG. This one can take the risk appetite. Here, John Keats holding can be seen as the moderate risk appetite. Like they take the risk and but in a controlled manner. Then, on the other hand, LSPLC can be seen as the dynamic risk appetite. They are more flexible and willing to take care of the opportunity, even if it is take the high level of uncertainty. The next one is just attitude. Here, John Keats generally is high structure and conservative. Like this reflects careful and ethical approach where decisions are guided by the established framework and risk controls. Then other one is Galle.
So when you compare to the Hades, JK's risk appetite is moderate. High. When you compare it with the top 10 individual company, when you compare it with the Hades company, what is your view? They are taking more risk than Hades. Right. But this is a company. They are in so many opportunity. So they are going to take much risk than they are taking the risk means create some opportunities. That's that retained as the largest conglomerate in Sri Lanka. Good analysis. They are not report. That was they are not report. They mentioned the instead. He selected the don't teach one. Annual report. Okay. I'm asking whether how you have got the analysis. You're saying that the appetite of the notice or the moderate and the AL is dynamic. How you come up with that? It will be fully unless don't be and it's not there. Don't just what you are reporting. No, I want to know whether you have done this or not.
Yeah. Here, implementation of the holding separates in features, IT, logistics, plant operations, and financial services. Because of that, we are facing three types of risks. First one, strategic risk, business risk, and operational risk. So we are going to present strategic risk. So strategic risk comes from the outside factor. So it is affect to the company's future goals and company's growth. So these are the strategic risks that are related to the long games. First one, geopolitical and economic concern, and the high dependency on the tourism sector, and the third one, regulatory and policy change, climate change, and extreme weather. So the next main risk is business risk. Business risk is linked with the company profit, company completion, and computation. So these are the business risks that related to the young teams. The first one, financial and retail risk, and the competitive pressure, and the reputational risk, and the fourth one, supply chain disruption. And the third main risk is operational risk. Operational risk is related to the problems in the inside of the company. So, as an example, the cybersecurity threats and the employee civilians, health and safety concerns, and system and equipment failures. So, I have added the table that I have mentioned earlier. Risk and the examples likewise. So I like to do first.
Don't use the AR factored in this way. This one is risk education. It's called the coming risk education. These risks are identified through the whole business units. Then like this one is strategy, financial, operation, information, and the new one is PhD. Once they identify the risk, then they assess the risk evaluated using a 5 metrics. Categorize it high, medium, low. Then the response in the risk like coming up with mitigation plans, developing includes controls and contingency measures in proactive strategies. Then they are day-to-day monitoring activities like online ER, they adapted online ER system key risk indicator and self review risk and control self reviews and trends. And they are reporting risk and response accurate to the report group executive committee and board for oversight. If I move the necessity of ER and don't keep for this. The organization with diverse strategy, operational, financial, and compliance risks. To face those, the ERM is very important here. To strengthen strategic alignment ensures to
long-term sustainable growth, enhances efficiency, resilience, stakeholder confidence. There are so many risks are there. I mentioned implemented 2 year risk here in how they mitigate those. If you take financial exposure risk, manage through centralized treasury oversight, then next one, the other mitigation strategies using hedging and liquidity management. Next, the other risk is cyber security. Strengthened via cyber security frameworks. The next strategy is supported with monitoring and employee training. And moving to internal control. If we come to Yonki Holdings PLC, internal control safeguard assets, ensures a reliable financial reporting and promotes compliance and fosters a risk-aware environment across all levels, including the inside the environment. Each employee share responsibility for risk, aware to make aware. Then there are some of the key control areas. If we take financial, each segregation of duties and approval hierarchies and audits, internal audit. In next types of risk, intrusion detections, which means like cyber security breaches and anomaly detection. They adapted the forensic analytics in employee training and next fraud prevention for trigger framework, preventive directive controls. The risk awareness and don't get
Right. Okay. So, who prepared this report?
what the party.
Who prepared the 4.1 strategic report? Has been done nicely, but you have not included the presentation, right? You have nicely presented the report, but you are not included in the presentation, right? The examples are very important. Actually, the report is nicely prepared. But thing is, you have to upload the report. So therefore, I have to put some marks for that. Nicely prepared. Report is nicely prepared. Yeah, when it comes to JK, I think it is looking as a conglomerate. What is the main revenue generator? That is the main revenue generator. What industry? Who is it? We can. Who is this? What do you think? What is there? You know, like only zero. You never know. The prince you also yeah, I'm asking who's the biggest revenue generator of this company. So it's all good. Please. Yeah, it's the retail sector. Retail sector is the main revenue generator. So, all over the Lanka. So, who are the competitors for the the main company. Yeah, for the team, the retail shop. Africa. For the target. So how they are going to have? So my question is how they are going to mitigate such kind of risk. So basically, the main revenue generator is the retail sector. And what kind of strategies they are following to mitigate the what you call the competitive? They have to make promotion, like ingredient. That's a operational level income. So I'm asking in the strategic level, what kind of strategic decisions they are taking to compete with the competition?
They have branches in the geopolitical locations. Percent there. Compared to the cartons, they have more company. Base, I guess. So they have after they have extra. Their own product.
Yeah, have you seen they are actually moving to their products? No. Even though there's a GPT also from the key.
Yeah,
They are moving towards that. They are trying to manufacture their own products. They are trying to sell their own product to the retail at a low price because they are having a kind of advantage. And also the one of the strategic move they are having is to see that when the car is opening outlet, they are opening another outlet near that.
Yeah.
That's the one challenge that Coca-Cola also going through. But Coca-Cola they are the only product in world one before the Pepsi coming to the act. But they have done once the Pepsi coming to the act. So they buy all the Pepsi bottles from the market. Coca-Cola company. So then what will happen? No one don't know about the taste of Pepsi. They are only consuming the Coca-Cola. So those are the strategic moves. Since these companies are kind of biggest company in Sri Lanka, so they can do whatever they want. So what is the recent risk they are facing when it comes to the new, they have new kind of a business line now.
they open the cinema line.
Yeah.
If you know,
Yeah. Other than that, they have started a new line, business line. They are entering into new business line. You can see that thing in everywhere. The BYD,
yeah, you guys.
so there is a potential benefits they are getting because the EY is the next step. EV is the next step in the market. So they have faced some issues, regulatory issues. Have you came across? What is it? Second thing. Electric capacity.
The custom, the electric capacity is lower.
Yes. No idea. But that's happened. EY vehicles. Especially for the adult. There will be a kind of tax issue because they are mentioning that normally the adult vehicle is having a 150 kilowatt battery. So if you are coming with a 150 kilowatt battery, the tax is very high. But they are saying for the Sri Lankans, they are importing 100 kilowatt battery. So then there will be a difference, 22 million difference between the tax 100 to 150. The actual, the normal vehicle is 150 kilowatt. But the thing they are importing to Sri Lanka, they are saying that it is only 100 kilowatt. That's the issue. And they are not allowed to check it. Because if someone is open that, they are saying that they can't give the warranty. So that's the issue. So normally when it comes to Sri Lanka, when you are having a medical import to Sri Lanka, the capacity will be checked by the Morocco University. They are checking the capacity. Capacity in the tax second 1000 cc, 1500, the luxury vehicle. Right. So overall, again, luxury vehicle 800 cc again. So tax second see the attack million of tax second million there. That's the issue now. Nowadays, they are all these. I will remove some marks, right? Okay. I have to do it. Like the guidance. Thank you. No. 2 or 3 months. 2 months, right? Yes. Otherwise, it's not. They are for other. They have uploaded that on time.
Then the report that the work may be.
It's 3 severe. This is also right? Rather than number 8 to come. That's okay. Then what's you? Given late something, so like another company, maybe like other on time computer, but over late submission and then Lanka pen drive class or whatever, here. Yes. I will again, Malay brother. All right. 4 days. 4 days. 4 days. 4 days. 100. 100. 006. 061. 10. Oh, thank you. Hello. You are there. Now this. Okay. Let's start.
Number 8. Applied ASEAN activity. So let's move the slides on. These are the members. So as you can see, number 8, introduction of ASEAN is the largest telecommunication service provider in Sri Lanka as a part of Malaysian-based ASEAN group, Berhad. So since its establishment from 1993, the company plays a major role in providing transforming the country's digital and mobile landscape. So with the over 70 million of subscribers, the company made they have a company maker largest which means the company make over the yeah, but closely associated with the connectivity and the reliability and also the innovation in the ICT sector. So data goes beyond the voice and mobile data, which means they are providing services such as fixed broadband, then digital television, enterprise solution expanded into areas such as e-commerce and also the IoT solutions. So let's move to slide. What is risk and the concept of risk management? So what is risk? Risk is the chances of uncertain event and conditions which have negative impact on the organizational goals. So in the case of telecommunication providers, the risk may be processed in various sources, such as operational risk, which means example for that network outages, system failures, and also cybersecurity risk, which is data breaching and hacking, and also marketing and financial risk, technological risk. So overall, if these risks were not properly managed, it could be impact on the financial stability of the company and also the reputation and the trust of the consumers. So now we will look how develop the process of the risk management by taking an example as cybersecurity risk. So as the first stage is scope and the context, initially develop has a massive pool of data and externally it raises cybersecurity concerns and also strict laws. So for that, even 1% of data breach will be impact and also the network outage more than 6 hours will be considered as a high risk. In this stage of risk assessment and the identification, key threats like phishing, malware, and most sophisticated attacks such as AI-driven cyber attack, it will be considered as a potential high-risk event. And also in the event of analysis and evaluation, they require direct oversight from the board risk and the compliance committee. And the other stage is, and also for dialogue to respond to these strategies, they have 4, which means avoidance, mitigation, and transfer and the acceptance. And finally, monitoring and reviewing, which happens continuously, and also regular compliance check and the board updates. So through this process, dialogue ensures that those risks were identified, managed, and protect both company and also the million of customers. So now over to Rajiv. So I learned to was still limited, but stakeholder confidence is very important to deepening of faith trust through transparency. Last one is regulatory compliance. Schooling of required by governance. Basically, one very PLC is the main telecom and data. the strategic goals. Strategically, a long-term threat to affect the organization growth and their vision. In direct ASEAN PLC, the Pacific is customer behavior changes. Consumer demand rapidly shift to from traditional voice SMS to data-entry platforms and OTT applications like WhatsApp, Facebook Messenger, and next is economic risk. 2020, Sri Lanka faced a economic crisis. As a result, the consumers decrease their disposable income. So they reduced to purchase mobile packages and devices. Next one is business risks. Business risks arise from day-to-day activities in the company. Financial risks. Most telecom equipment like 4G and 5G, importing from USA and their pricing USD dollars. And the sharp price depreciation of Sri Lanka, they want to money to import and reputation risk during nationwide power cut in Sri Lanka. In a lot of customers complaints about the network disruptions. Dialogue means that digital platforms to avoid it, and operational risks. Very risks is the cyber security base. Currently, they are increasing the incidence of phishing, malware attacks, and potential data breaches of sensitive data from the customers and the employee channels. Dialogue find the skillful network employees and developers, and they try to give the more retention to them. And these are the risks, types of risks of the dialogue Asiata agency. Over to Kushna. That I discuss the risk and dangers of the organization. Yeah. Risk management framework. This is widely accepted by the organization. There are 5 components of COSO or enterprise risk management framework. First one is governance and culture. Governance and culture is about establishment of the risk management, and culture is ethics and values of your organization. Strategy and objectives, the strategies regarding the risk and objectives of the organization, with the determination. The performance means the evaluations, like how they manage the risk, and those reports are given to the stakeholders. And the evaluation means the methods used for risk management. They are reviewed regularly, and adjustments are done. Information communication and reporting is the data needed for and data and information needed for risk management. Then, why organizations need enterprise risk management? First one is increase focus on the perspective of risk. It is to focus more on the risk. Data efficiency, resource allocation needs. Efficient allocating the resources, mitigating the risk, and creating the solutions for the risk. The enhanced confidence means the management gain confidence. They are able to put that open. And employee satisfaction means employee get satisfied that they are working in a good company, Colombo group. So the productivity of the company is so decision making for managers. Enterprise risk management is very important. One is information technology department. They are to prevent the frauds and to protect their customers. They are using certain message to make customers aware about the protect from the frauds. They are delivering information to customers. So that is done with cyber attacks cannot attack their information systems also. So they protect their customers and organization. In legal department, they have a BSAA document, which is all the details regarding the mitigation of illegal conduct shown. Then in the management department, they have whistleblowing method. In whistleblowing method, the corruption by consent, other staff are detected. In marketing department, it's like what time methods to promote their service to customers. Now I invite company to present. It is about directors.
Yeah, no, you know that.
Every company board of directors has a key role in safeguarding shareholders' investment and assets, also ensuring the business sustainability and risk management, such as cyber security and privacy regulatory changes and rapid technological changes, and also the consumer behavior changes. So here are the key roles of board of directors of Lanka. The first one is establishing of committees and reporting lines. The board of directors of Galle has established these committees on behalf of the board of directors to regularly meet and check about the risk management process and check the effectiveness of the risk management process. Here are the several committees. First one is Board Risk and Compliance Committee.